Hey everyone, welcome back to Corporate Decoder. You know what they say, good things come to those who wait, but sometimes the wait reveals things you might not have wanted to see. Today we are diving into a report from Principal Financial Group Inc. That dropped on the 22nd of January 2026, and folks, this one is a little different. It's not a full quarterly earnings release, but it gives us a sneak peek at something super important, their assets under management, or AUM. Before we jump in, if you like your corporate news chopped up and served with a side of plain English, make sure you are subscribed. And hey, we've got a Discord community linked in the description where we break down these filings even further. Come join the conversation. So Principal Financial Group, they are dropping this report on the 22nd of January 2026. Now, this isn't your typical earnings announcement. This is more of a pre-release heads up on their assets under management, or AUM, as of the 31st of December 2025. Think of it as a scoreboard update before the big game. It's important because it shows how much money they are managing for clients, and that directly impacts how much they make. The company itself, Principal Financial Group Inc., based in Des Moines, Iowa, they are a big player in the financial services world. You might know them for their retirement plans, life insurance, and investment management services. Their stock symbol is PFG, and it trades on the NASDAQ Global Select Market. Keep an eye on that ticker as we go through the numbers. This filing, it's primarily about Regulation FD, which means they are disclosing important information, broadly so everyone gets it at the same time. They're giving us a look at their assets under management, or AUM. This is the total value of investments that a financial firm manages on behalf of its clients. More AUM typically means more fees for the company, so it's a really crucial metric for assessing their business health and growth potential. They are telling us here that this information is being shared before their full quarterly earnings release, which is expected around the 9th of February 2026. Alright, let's get to the good stuff, the numbers. As of the 31st of December 2025, Principal Financial Group was managing a colossal $781.0 billion in assets. That is a heck of a lot of money. To put that in perspective, that's a 7 with 11 zeros after it. Now, they break this down. $593.9 billion is managed by their principal asset management. Investment management division, this is likely their broader investment arm, handling stocks, bonds, and other securities for a wide range of clients. Then, they have another $153.9 billion managed by their principal asset management, International Pension Division. This focuses on managing pension assets probably for large institutions or companies with defined benefit plans, especially those with an international focus. Here is something to note within that $593.9 billion from investment management. They are telling us that $13.0 billion is from operations that they disposed of or sold off in the fourth quarter of 2025. This is important because when you look at raw AUM figures, you want to know if growth is coming from new business or just from holding on to less. This disclosure helps clarify that some of their growth might be organic, not just from what they've previously managed. So for the quarter itself, the period ending the 31st of December 2025, they are reporting a positive impact of about 1.5% on their assets under management. Now, they are careful to say this excludes those disposed operations. This 1.5% came from a few places. Foreign currency translation, which means the value of foreign investments changing due to currency exchange rates, market performance, which is the natural ups and downs of the stock and bond markets, and other items. This is a healthy sign, showing that even after accounting for things they sold off, the money they are actively managing grew a bit due to market forces and currency shifts. It's not a massive surge, but a solid incremental positive movement, which is what you look for in a mature financial services company. They also give us a bit of insight into their strategy and the risks involved. They're highlighting that in times of market turmoil, when things get a bit wild and returns can be all over the place, they have exposure to certain segments. This includes small cap and mid cap stocks, international products, high yield bonds, preferred securities, and those exchange rate movements in emerging markets. Why is this important? Because these types of investments can be more volatile. Small, mid, and international stocks can often outperform larger, more stable companies, but they can also fall harder. High yield or junk bonds offer higher interest payments but come with a greater risk of default. Emerging markets are known for their growth potential, but also for their unpredictability, especially with currency fluctuations. It means Principal is aiming for growth in potentially higher reward areas, but they are also opening themselves up to greater swings in their AUM. This is classic Warren Buffett thinking. Understand your risks and be compensated for taking them on. And finally, we get to the signature section, which is basically just the formal sign-off by the company's authorized representative. In this case, it's Humphrey Lee, Vice President Investor Relations, signing on the 22nd of January 2026. This just confirms that the report is official and has been authorized. Now, looking at these numbers and what Principal Financial Group is telling us, especially about their AUM, here is my take. They are managing a seriously large sum of money, over $780 billion. That puts them in a strong position in the financial services industry. The 1.5% growth, while modest, is positive, especially considering they divested some operations. It suggests their core business is either holding steady or growing modestly, and market tailwinds are helping. The real story here, though, is about their strategy. By actively investing in areas like small, mid-cap, and international markets, they are showing a clear intent to capture growth beyond the most stable, conventional investments. This is a double-edged sword. In good times, this strategy can lead to outsized returns for both them and their clients. But in volatile times, as they themselves point out, these segments can experience sharper downturns. This means Principal's AUM, and consequently their revenue, can be more sensitive to market swings than companies focused solely on large cap stocks and investment grade bonds. The opportunity is higher growth, but the risk is greater volatility. What is notable is that they are being transparent about these risks. It's good that they are flagging their exposure to these more dynamic market segments. It shows they understand that managing risk is just as important as seeking returns. Their ability to navigate these market dislocations and consistently grow AUM even by small percentages while managing those risks will be key to their long-term success. In conclusion, Principal Financial Group appears to be on a steady, albeit not explosive, growth path. Their substantial AUM provides a solid foundation, and their strategic bets on varied market segments offer potential for higher returns, balanced by inherent risks. It will be interesting to see how these strategies play out in the coming quarters, especially if market conditions become more challenging. Alright, that is our breakdown of Principal Financial Group's latest AUM disclosure. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.